money's tight, for debt she's got the cure. She knows the way to help you save your money today. Build a budget, grow your wealth, nurse your health. Come on, don't delay. With her advice to learn how to allocate, don't hesitate. Wait, this is the day to elevate your health, your wealth, and everything else. Get money saved, no matter what it's felt. There's a disease that thrives, that ruins our lives. It's yet you bet, but sure we can fight it. You know that she'll help. Not her, then who else? No in between. She'll make it a scene, 'cause
it's the queen of queens with the money when it matters for you and I. It's the queen of queens with the money when it matters for you and I. It's the queen of queens with the money when it matters for you and I. It's the queen of queens. It's the queen from Queens with the money when it matters for you and I. It's the queen from Queens with the money when it matters for you and me. It's the queen from Queens with the money when it matters. Listen and learn. It's the queen from Queens with the money when it matters. Y'all come and see.
build your dreams up with Paula. She got ya. She can reach your goals and soar. She will keep your mind on the dollar. That's a disease that can be cured.
It's the queen from Queens with the money when it matters for you and I. It's the queen from Queens with the money when it matters for you and me. It's the queen from Queens with the money when it matters. Listen and learn.
Hey guys, this is your girl Paula, the queen from Queens. This is Wealth Wednesday. Today we're talking about home buying and creating generational wealth through home ownership. So it's very interesting. I have a young lady here who, Miss Trina Hay, she's a senior loan officer, and we just met in January. I purchased a second home from her, and it was amazing. As soon as we met, we talked about our faith, creating generational wealth through education, and through home ownership. So I want to bring for you tonight, Miss Trina Hay. Hey Trina, how are you?
Paula,
How you doing?
I'm doing well, thank you. How about yourself?
I'm doing fantastic, I got to tell you. And I'm so happy that you're here because
I'm
it's
happy
so
to be
important. Well, thank you. We just got to get this information out. Because being a homeowner, for me, very honestly, I grew up in an apartment. I never owned a house. And I never had a desire to own a home, quite honestly. I was pregnant with our second child, and my husband said, we're not having another child in an apartment. I'm thinking, oh, what's the big deal? We'll just get a bigger apartment. And honestly, from the time he started working at AT&T, he saved $200 per paycheck. And about 3 or 4 years later, he had enough to put down a 5% down payment on a home. So home ownership is important. So thank you for being here.
Thank you so much for having me. And two, just like you, very similar backstory. Coming up, we rented apartments or rented houses. And I was fortunate enough at the very young, tender age of 20 is when I purchased my first home. and have been fortunate to be a homeowner ever since then. So,
and it's so interesting because my son, who lives in North Carolina, he decided, you know what, I'm tired of renting. The prices were going up, 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 and somehow, by grace, he fell upon a home buying program for first-time home owners, and now he has equity of more than $100,000 in less than 3 years.
absolutely. Absolutely. Happens often. I've watched it with several of my own customers. I can honestly say I watched the exact same thing with my daughter. At this point, 4 years ago, when she got out there, got home from college, and at that point, when they get ready to leave your nest, she decided that she was going to go out and start looking for apartments. And in getting out there, she saw the prices and just how crazy it was for, somewhat ratty 1-bedroom. I was thinking, listen, first of all, no need to rent. We don't need to rent. If you have the option to buy, it is smart for you to exercise that option. And upon doing that, she went ahead and she purchased her first home and well over $100,000 in equity in that space at this point.
So is now a good time to buy a home? I mean, considering with the home buying interest prices at this point and inventory being so low, is now a good time to buy?
Well, it's typically not a good time to rent. In my personal opinion, always a good time to buy. And I say that, I use this analogy often when dealing with my clients, and the question comes up so frequently, should I buy now? Should I wait? And I tell them, especially when the conversation turns to, oh my goodness, these interest rates are 6 and 7%. So I kind of go back and come at it at a different angle. What interest rate are you paying while you're renting? 100% is what you're paying while you're renting. So what you may want to consider doing is paying for your own place, taking that 6 or 7% interest rate and paying it on your mortgage, but collecting all the rest. So it is absolutely a good time to buy. What I share with clients, if you can afford to, you're in the position, everything else is lining up for you, it is no question in your best interest to go ahead and purchase. In addition, what we've seen, especially in our area, and Paula, I know you've experienced this in your market where you're located, sales prices are going up as opposed to going down. So if you want a chance, instead of buying now, you turn around and buy later, what's going to happen later? It's pretty likely that you're going to have to pay more for the same property that you were looking at this year, next year. So what happens in that case? It could potentially put your options for home ownership, it could push it out simply because you didn't pull the trigger now.
You're right. And again, my inexperience and my ignorance of not knowing the home buying process. When we bought our first home, we put 5% down and we lived in our first house for about 12 years. Very honestly, we paid, I don't know, about $210,000 back then. When we sold it for more than twice what we paid for it.
Certainly. Absolutely. Yes. I mean, and that's the first key to, getting financial wealth through home ownership. Oftentimes people don't realize you may be in a position to purchase that property and 2, 3, 5 short years later, is it possible that you would save $150,000 in that timeline? Most likely not. But could you gain that liquidity via the equity in your home in that timeline? In the right market, everything else lines up. Very possible. And thus, lately it's been more probable than possible.
But Trina, the truth is it's hard to come up with $10,000, $20,000 to put down on a home.
It is.
And I know in Washington, D.C., where a lot of my colleagues live, they have programs where you get first-time home buyers assistance. In addition to that, they have programs where they give you that down payment money.
And fortunately, they're out there and they continue to exist. We have access to pretty much the majority of the down payment assistance programs that are out there and available, and they're typically all around in most of the. I'm pretty sure pretty much all the states. Down payment assistance programs. I'll have clients that will wonder, is this the best route for me? And typically, I'll look and say, listen, if everything else is lining up. And if having your down payment is the thing that's standing between you and purchasing your home, and you're eligible, credit is there, debt ratio is there, you've got the job security, and maybe the ability to save that lump sum has eluded you through the years, but it's available to you now. Let's see, take the down payment assistance program and purchase your home or continue to rent. I'm going to go with the DPA program every time.
Yes, ma'am. Yes, ma'am. And very honestly, my son, when he got into his house, it was nothing but a blessing. He had no down payment, no PMI, just closing costs. And again, after 3 years, he has at least $100,000 of equity.
Yes, very
So
much.
let's talk about some of the common credit mistakes that people have, because people don't think that having credit of 550, 600 is bad.
Well, it is bad. But the same way you ended up with 550 and, very low 600 credit scores, you can turn that around. You can typically turn it around a lot quicker than you can get it there. So I typically tell clients, listen, at some point you have to stop, draw the line in the sand, and decide that working on your credit is important to you. You can see real clearly how it's advantageous in most areas of your life to have a good, strong credit score. So one of the first things that you want to do is look at what you have outstanding, look at who you maybe owed, didn't have the ability to pay at the time, and see if you can go back and work on that. Get with a good, strong lender who can take a look at your credit report and say, hey, let's start here. Let's make a move there, and see the steps that you need to take in order to improve those scores so they can help with your eligibility.
So I have a lot of, I'm sorry.
So it really shouldn't be one of those things that just, that's a hard stop. It should be a starting point if you think about it. If it's your issue and it's what you need to work on, it's where we need to focus and put our attention.
So let's talk about that. Let's talk about some common mistakes people make with their credit.
Okay. All right. If I had to guess, I would say the common mistakes tend to be overutilization. And that's kind of where you get more credit than you can reasonably manage. That can be in the form of you get a credit card to your favorite store, and you make the decision that every time you go there, you've got the credit card, so you feel inclined to use it. What you might want to do is do probably what you did beforehand. Use it lightly so that you can pay it off, or so that you can keep a relatively low balance. So instead of maxing out that credit card, use it moderately. Make sure that your payments are made every month on time. Those late fees are fierce, and they are continuing to come. So not only can it be, the potential for late fees, it's also an increase in the rate that you're paying on that card for not paying on time. So I always suggest that people just make sure you keep an eye on your credit. There are avenues for you to get a free credit report every year where you can check your scores. And I suggest people do that, especially those that maybe they've kind of taken their thumb off the pulse and really ready to get in there and start taking all of that serious. You want to take a look at that at least on an annual basis to make sure that things are being accurately reported and that your payment history is accurately captured.
And Trina, very honestly, knowledge for me is power. And this is why I do these shows, because I want to empower people who listen, who follow, who watch, because there are so many mistakes. And I remember very honestly, during the mortgage crisis back in 2007, 8, and people were bragging about, oh, I have a principal only, I have lots of money left. And I remember asking a friend, but when are you going to own your home if you're only paying, I'm sorry, interest only
Interest
loans?
only, yes.
They're only paying interest only. So when are you going to own your homes? So there's so many different types of loans. Can we talk about some of those?
Certainly, absolutely. Typically what I share with clients, a lot of the loans that you're referencing. So let's just, take a little trip back down memory lane. The interest only mortgage loans that were out there, uh, it's going to be difficult to find those. And it's simply because what we found is that those loans were ultimately not in the best interest of all customers. Could it be advantageous for some? Certainly. Those under different circumstances, but your average client who's out there, or your average homeowner who's out there working every day, same job, same income, same life issues, that's probably not the best loan for them. So those aren't readily available anymore. But when you look at the different types of loans that are out there, we've got conventional loans, and those are just kind of the vanilla loan that's out there. It's a conventional loan, typically requires 3, 5, 10, whatever percentage beyond that you'd like to put down. But it's a good basic loan, 30-year fixed, 15-year fixed. You can look at adjustable rate mortgages. Those are out there. Not as popular right now. In this rate environment, it's just not as advantageous for people to look at adjustable rate. So we don't have as many of those as we've had, in years past. You've got government loans. You've got VA loans, which are for our veterans. They've got to have a valid certificate of eligibility in order to obtain that type of loan. You've got FHA. FHA is a common first-time home buyer loan. It was my first-time home buyer loan. When I got my first loan, it was an FHA loan. You can get USDA. USDA is 100% financing. Your home has to be in a rural designated area, but 100% financing option is available to you. So, several different loans, jumbo loans, you name it. One good thing about our company, mortgage loans are all we do. So we're the Burlington Coat Factory of mortgage loans.
So are you just a person who you handle primary loans and nothing else? How does your organization handle loans?
Okay, so we handle mortgage loans for your primary residence, your secondary residence, your investment properties. We handle all of those. But on our end, no commercial properties. So no commercially designated properties. But if it's, owner occupied or residential occupancy, we handle all of those. And that can be anything from single family residences, which is, just your freestanding home, to a condo or townhome. You can have duplexes, triplexes, quads, all of that. Those all fall under the same category, and we can finance all of those.
They're coming for me. I'm waiting for them.
Understood.
So what are some of the steps in the home loan application or underwriting process?
Oh, goodness. That's a very loaded question. So I'm going to try and make sure that I cover as much in that as I possibly can. The first thing that I tell people, you got to apply. You've got to apply before you get to the underwriting process. Okay. And what that allows you to do, Paula, just kind of taking you back, we will send an application link. We're in the age of technology now. So someone sitting down with pen and paper, hadn't seen that in a bit. So there's usually an application website or portal that you can go in. You share your information in that very private and secure portal. That's between you and your loan officer. You're going to ask for things, or you're going to document a few things. I typically tell clients, you're going to document, first thing you're going to do is share with us your personal information. I'm going to need your identification. You're going to give me the basics: name, address, telephone number, social, date of birth, email addresses. I'm going to need to know, who do you work for? Name of your company. What's your position? How long have you been there? What's your salary? Then I'm going to want to know, what are your assets? Do you have little money in savings, but you've been on your job a long time and you've been very disciplined and you've got money in your retirement plan, your 401k? Those are always good, viable options for down payment. And we look at all of that. And then on my end, I go in and pull your credit. So you complete all of that through your application. I take a look at it. We have conversations and we determine what the next step is. So in all honesty, Paula, you don't get to the underwriting process typically until you get through me.
Okay.
Because I'm going to take my time and I'm going to look at that and we're going to discuss numbers because we want to make sure you're very comfortable in going to the next step. We want to make sure that you understand what that payment's going to look like, how much money you're actually required to bring. Are you eligible to move forward at the moment? What if you're not? What do we do next? So before you get to that underwriting process, we're going to look at that pre-approval process going through with me to make sure that everything is okay and you're ready to move on to the next step.
You know, Trina, you hit so many nails on the head that I just want to ask so many questions, because when you talk about the process, and there has to be truth in lending.
Yes.
So people say, oh, you see this big house. Oh, it's only $4,000 a month, but they're not talking about taxes. They're not talking about insurance. They're not talking about the big one, which is PMI. Tell the audience what PMI is, why it is, and how we can avoid it or how long it'll last, please.
Okay. Couple things there. PMI is private mortgage insurance. And private mortgage insurance, I can tell you up front, it benefits the lender. So the lender is the one who gets the benefit of you paying private mortgage insurance. It allows you, if you're going to purchase a home and you have less than 20% to put down on that home, private mortgage insurance basically provides a gap in coverage for that loan on your behalf. That's one of the reasons why I suggest that people put down as much as you can. My very first home loan was 3.5% down. Paula, I think you shared that you were at 5%. You had private mortgage insurance. I had private mortgage insurance. But one of the things that we want to always aspire to do is, how can I get rid of this PMI? Because again, it's for the lender. We're thankful for the lender, but we don't want to keep the lender any fatter than we have to, especially if we've got to pay it on a monthly basis. That's a generous thank you on a monthly basis. And we want to try and get out of that as soon as we can. So one of the ways that you can avoid it, the very first thing I said is private mortgage insurance can be avoided by you putting 20% down on your home purchase. That can be pretty steep in this market, and I understand. So if you're looking at the difference of, I don't want to pay private mortgage insurance, so I'm not going to buy. I'm coming back to my advice all along. Pay the little bit of insurance so you can get equity on the other side. It balances out very nicely. So you have that option in starting out. If let's say you've purchased that home and you're paying private mortgage insurance, but Paula, as you were saying, you look around and you've got that great equity position in your home. Hey, this may be an opportunity for you to petition the lender to remove the private mortgage insurance during the course of a refinance. You may get into a more friendly loan wherein private mortgage insurance may not be required because of the equity position in your home. So several different ways that you can get rid of it. The biggest obviously is to not have it on the onset. But if you do have it, you do have the option of getting rid of it, either in time, in paying it once the value of the home reaches that 78%. In some cases, that can take 10 to 15 years. So you typically want to pay real close attention to that so you can get rid of that portion of the payment as soon as you can.
I have a couple of questions from the audience, and this is a two-part question.
Okay.
I can read it to you. I'm Alika McCall. Are you familiar with the Neighborhood Assistance Corporation of America program? If so, do you have advice for someone interested in that program?
Okay. That's known as NACA. Okay. NACA is a great program. I tend not to really knock any of the programs out there that are designed to help people obtain home ownership. Every program has its ups and downs, caveats. Maybe it seems a little, it seems as though the program is slow. We will, you'll have them out there wherein, NACA requires lots of meetings. They tend to be very thorough. The main feedback that I hear from individuals going through NACA is that it feels like it's taking me forever to get there. And this is kind of a sidebar, a little joke that I used to say personally. I was intending to go and get a travel desk and a chair and sit outside of NACA's offices and wait for the people to come out and say, I think I can get you there now, and get a whole lot of clients ready to go and move forward. They have a process. NACA's process is really designed for a lot of potential home buyer education and prep. Some people need that, Paula. They really do. Others are actually, in a position and they're ready to go. But according to NACA's process, you're going to go through their system. It's very regimented. It's designed to be a little bit slower and a little steadier, just to make sure that you're ready. The whole intent there, and that's pretty much anyone in the lending industry's intent. We want to see you obtain home ownership, but we also want to make sure that you're ready and that you're going to be able to keep your home. What we don't want is the devastation of someone who's not ready, getting in a home, not understanding all of the regular responsibilities that come along with it, along with the financial commitment, and get themselves in a position where they could potentially lose the home. So lots of attention paid to that.
So when are you too old to buy a home? When is too late? Because we're looking at 20, 30-year mortgages. When is it too late to start the process?
Well, I've got a little backstory on that. I think of this very fondly. I can remember having a client a few years ago, and she came to me, and at the time she was 68, about to be 69 years old. And she had been referred to me by one of my referral partners, an agent. And we talked, and she said, I've always wanted to buy a home. I had 7 children, and I wanted my children raised in a home that we own, not a home that someone else owned. Now, obviously, at this point, she was, 69 years old. She didn't have children still at home, but she still had the desire to one day purchase her home. I worked with her. We worked together for probably, it was easily 2 years before she was ready. We started with the credit. She had a setback here, a setback there, but she stayed true and diligent because that was something that she was intent on buying. We were able to get her in her home. I want to say that at that point, she was about 72 years old, Miss Geneva. She was about 72 years old, lovely woman. I was able to assist her in purchasing her home. We think about it. First of all, you're never too late or too old to purchase a home. We don't discriminate. You can come in 85. I cannot many times. Some of, grandmothers here and there will help the first time home buyers merge the gap. We've got a lot of family living wherein, parents come and live with the younger ones. And instead of going into a rental, they can all get together and purchase a home together. So you're never too old to buy. You can still sign and ink that paper and everything else lines up for you. You can purchase a home too.
So Social Security is the acceptable form of income payment? I mean, I'm not acting as if I'm ignorant, but I have a lot of people in my family who are in their 60s who are still interested in the home buying process. Mm-hmm. And we want to make sure that it's still possible.
Certainly, it is. Social Security, the good thing about it, we've got a really clear-cut amount. We know you're going to continue to get it. It's a great source of income. So yes, we certainly use that as a source of income. We can document it. We'll get a benefits letter, and that is definitely an income source for us.
Now, I know you're based out of North Carolina because that's where I purchased my second home at.
Mm-hmm.
How far is your reach?
My reach is North Carolina, South Carolina, and Virginia. So anything further out there, I cannot be your direct lender, but I can assist you. I've got folks in my office who are licensed in all 50 states in the United States. So if you're interested in purchasing in Texas, if you're interested in purchasing in Florida, wherever you're interested in purchasing, we can help you.
And here's another great question. Sometimes the home buying process feels daunting. For first-time home buyers, especially solo buyers, what helpful tips can help take the grrr, for lack of a better term, out of the process? Great question.
Here's what I'm going to tell you. It's like most things that you'll run into. You've got to be intentional with your steps. If you know that this is something that you want to do, and you know that you're going to go through this process solo, I think of it as we all have to pay to stay. Make the decision to pay for your own property that you're going to stay in. It can be that simple. This is not rocket science. This is an opportunity for people to own their own home. So I would tell you to try and keep things as streamlined and as simple as you can. One good thing about doing it alone, we don't have to worry about balancing out someone else's something. It's just you. You're responsible for you, and you just pay real close attention to everything that you're doing as it relates to your finances. Try and be very disciplined so you can pull everything in. And I do understand that it's hard, especially in this market with sales prices being where they are. You look at the one check as opposed to two checks. I certainly get that, but I do it every day for single people, every day.
So the follow-up question to that, and I may be able to join in on that response, is what is the biggest difference between buying a main home and an investment property? Qualification differences, documentation differences. And it's interesting, when I bought that home with you in January, I'm thinking, okay, I'll just put 5% down because I'm living in a different location. I just need that as a second home. And my sister, I want to be in a position within the next 3 years to actually give that home to her. Give it in a sense. Right now, she's preparing her credit. She's building up her down payment money, but I want to transfer over the equity to her. But I didn't recognize that as an investment property or a second home, I had to put down 10%.
Mm-hmm. Mm-hmm. You do. So the differences between buying a main homes are going to open up to all of the avenues and down payment options out there. When you come out of main home ownership, then things tend to be more restrictive. And why? Because historically, what we've learned is if you have your main home, you tend to make sure that main home is your priority. And in hard times, tough times, people tend to fight a little harder for that main home. So investment homes and second homes, not quite as much skin in the game with those. So those would be the ones that if you had to let one go, those would be the ones on the chopping block. Honestly, to mitigate that, lenders decided that those properties would require a heavier down payment. Typically with investment properties, 20% down. Second homes, 10%. Primary can go anywhere from real talk 0% down to however much you can put down, 0 to 3 to 3.5 to 5, 10, 20, and going on from there. But second home and investment properties, definitely not the same qualification options or down payment options there. And looking at it also, for the most part, the documentation is the same process. We're going to look at it. We're going to see if you can handle that payment in your debt to income ratio and whatever your particular circumstances are. We'll run the numbers and look at your eligibility for the most part the same way.
I have another question for you from the audience. And the question is, Diana from New York. New York City, my hometown. How many years do you need to have at your current employment when applying for a home mortgage? Great question.
So that is a good question. What I'm going to share with you, what we document are the last 2 years of your employment. Will those 2 years have to be with the same employer? Absolutely not. It does not. But that's what we're documenting, your 2 most recent years from now back. So if you worked at, say, one of the hospitals, and you've been there for, say, you just changed jobs. You just got a great promotion and you moved from Baptist over to Methodist, and now you're over there and they're paying you a couple dollars more an hour. This is your place. But before then, you had 4 or 5 years over at the previous employer. Definitely acceptable. What we tend to tell people is we like to see job stability, but if you're in the same industry and you're pretty much doing a lot of the same jobs, it does not mandate that you have to be in that same job for a 2-year period of time. Not at all.
Well, we have a visitor in our backstage. I'm going to pull that visitor up. You're on mute.
Hi, can you hear me now?
Yes, we can.
Sorry, I wasn't able to hear you either.
We can hear you. You're live.
Oh, cool. How are you?
Hi, Lexi.
Hi.
So you got a question for me?
Yes, I do. So I'm currently in graduate school. I'm finishing up pretty soon.
Mhm.
I've never worked really before or accumulated any wealth. And I was just curious, as I'm thinking about the next steps of my journey, getting a house, moving on and getting more roots in the ground. How do you think I should go about doing that?
Okay. So the very first thing, obviously, Lexi, is you're going to have a job.
Yeah.
So once you've gone out there in the workplace and you've secured that job, a lot of times people will ask me, I don't have a 2-year work history. Well, fortunate for you, you've got your school.
Mm-hmm.
And we will go and we'll get your transcripts. And we do get the transcripts, Lexi. So we're going to pull that in. We're going to take a look. We're going to see that the last 2 years of your life have been you getting higher education. And that's most favorable. And go ahead and look at where your current employer is, what that salary is going to look like. And we basically go from there. But we qualify people coming right out of college every day. Long as we know that you've got a job that we can count on, being able to make that mortgage payment from, that is perfectly fine.
Oh, great. Thank you.
Mm-hmm.
Thank
Don't
you for
wait.
asking.
Bye now.
Thank you for asking that question.
Of course. Thank you.
We have another question from the audience. Edith Chamberlain, if you purchased your first home 24 years ago with another person and you sell that home, if you decide to purchase a new home solo, are you eligible for a first-time home buyer's plan?
No. You've owned a home for 24 years. You're not a first-time home buyer. So the combined home ownership doesn't mean that you've not owned a home. First-time home buyers basically need to have one main thing out there. In the past 3 years of your life, if you have not owned a home, it can restart. So you have to be clear of home ownership for 3 years to be considered a first-time home buyer.
So it's interesting that you said 3 years, because those are great numbers. Because even if someone got divorced, they sold their home, they've been in an apartment for 3 or 4 years, the clock starts again, or the calendar starts again with new home ownership as a first-time home buyer?
After 3 years, after liquidating or selling that prior home, 3 years from there is when you become a first-time home buyer. Yes.
Great information. I have someone else in the backstage for you.
Hello, how are you?
Hi, Ricardo. I'm good. How are you?
Doing well.
Very good. You got a question for me?
Yeah, I do. In fact, I do have a question for you.
Okay.
So I'm a young man here. I've actually just inherited a home
Mhm.
and it's fully paid off and
Great.
it's good, right?
Yes, it's
Paid
very
off,
good.
and I'm wondering if it would be smart to take out, I think it is a home equity loan or something like that, refinance it or whatever the terminology is.
Okay. Why would you do that? What do you need to do that for?
It needs a lot of repairs. It's an older
Okay.
home,
Okay. Okay. All
so
right.
things like
Okay.
that.
Okay. All right. So one of the very first things that I'm going to share, well, first of all, congratulations to you. Welcome to home ownership. We're pleased to see you get there, whatever your journey and whatever your path is. We're glad to see you get there.
Thank you.
So the first thing that I'm going to share with you is when you find yourself in that position, one of the first things that I suggest that someone will do is find out how much money you're going to need for the repairs that you want to make, whatever the upfitting and getting whether it's a new bathroom or new appliances in the kitchen or flooring, paint, whatever the circumstances are. Combine and see what it is that you're going to need.
Okay.
Don't go in and look at over borrowing. The first thing there, you've got a gift. You've got a gift. You want to make sure that when you're going in and you're putting mortgages against the property, that it is for what you need to do. A nice paid for house is really a gift. It's a gift. It's a blessing to have, but you want to make sure you use the same disciplines there and make so that you can stay financially fit, not erode the equity frivolously. I'm sure that you wouldn't, but I definitely just make sure that maybe he would. I try and make sure that I tell people, just be careful. Equity is certainly, it's wonderful. It's something great to have, but you don't want to overuse the credit on something that you may not need. I mean, I'll see people that'll say, well, I want to pay off my car and I'm thinking about going on vacation and I may get a new appliances while I'm doing that, a little something in there, let's call it a home repair. Home ownership, home equity, that's not really the direction that you want to go with that. So if you're looking at, things that are going to enhance the value, see, that's the one good thing about a good renovation. It tends to enhance the value of what you have. So if you go in and you've got one value, but you take equity from the home to enhance that, you've made a good investment overall. But you
Right.
want to make sure and keep those equity investments, where you're taking the cash out, that you're putting it back into the property and you're disciplined while doing so.
Exactly.
But yes, home equity loans are definitely a great way to do that. It gives you the flexibility to take care of the work at your pace, advancing money from the line of credit as you need to do so. But it's also out there in the event that you don't use all of it. If there's still a little gap in there, it gives you a small nest egg out there. Again, I don't suggest going too far, just a little bit of overage, but it gives you the nest egg to go out there for what ifs, or when things happen, you've got something to take care of, more urgent repairs, if you don't have the cash on your own to do it.
Exactly.
Thank you, Mr. Alexander. We appreciate you. You have a good night.
Thank you so much for having me. It was a pleasure.
Thank you.
I have another question for you. And again, this is another two-part question from Miss Minnie Johnson. Hi, I'm 26. Love that. I have more than $20,000 in savings. I want to buy a home, but I don't know how to use the money I have wisely. How can I put that towards a home and wisely build equity? Second part, what would you advise if I was planning to go back to school? Would that change how I would invest in a home? Great questions.
Well, they are. Well, congratulations on having $26,000. That's definitely a lot more than what I had when I purchased my first home. So good for you. What I'm going to suggest that you do is, first of all, get with a good lender. Let's make sure, if you're looking at first time home buying, that you're purchasing a home in your budget, that you're not overbuying, but that you're going to have enough money to take care of everything relating to that property acquisition. That's down payment, that's closing costs, that's moving expenses, inspections, appraisals, whatever is associated with that, that you are actually using that money towards that purchase. And maybe if you don't need it all and you can comfortably afford the payment without using it, then that can continue to be a part of your liquidity nest egg that you have out there. Now, if you're looking to purchase, but you're also looking to go back to school, I need you to think real hard, how are you going to make that mortgage payment? What's the plan there? And that really needs to be on the forefront, because they won't give you, what did they call it? Before, when they would put you in forbearance and making your mortgage payment so you could go to school, and kind of like they will student loans. They don't do that in the mortgage business. If you have a mortgage, it's due on the 1st of every month, whether you're in school or not. So make sure that you've got a really clear-cut avenue and thought process on how your mortgage payment will be made every month if you subsequently decide to continue your education.
Trina, thank you for being so honest, very honestly. We need people to understand that there is a process, and we don't want you to make mistakes going into the home buying process. I have a comment for you, and as well as I have someone else in backstage. The comment is from Leader of the Pack. Good information. I thought first time home buyer meant exactly that.
Nope, it does not.
Okay, well, I have another guest back here. Hello.
Hi, good evening.
Hi, Morgan.
Hi. My question is, what if I'm not currently ready to buy? What are those next steps, and how do I go about navigating that?
Okay, so one of the first things that I will share with my potential clients is this. If you go on my website and you complete an application and you're not ready to go, as in all honesty, more than 50% of folks are not ready to go at that moment. One of the first things that I would tell you to do, whether you decided to work with me or another lender in your market, whatever you decided to do, make sure you get with someone who's, first of all, going to be honest. They're going to review everything, and they're going to talk to you and listen to you and share with you what the next steps need to be. It can be something as simple as, I've gone through the process, I've pulled your credit, and you're just not ready. You're not ready. We need to look and see, why are you not ready? Are you not ready because, you've not been quite as disciplined with those credit cards as you need to be? Or you simply just have not found the fine art of paying people? The range can be somewhat broad scope. So I tend to tell people this: take some time, make sure you review and you sit down with that loan officer, because we're going to know. It's our job to get people ready to buy a home and assist them with home ownership. So it's in our vested interest to help you. The main thing that you want to do is be honest with them, with who you're working with, and tell them what you got. Talk to them about a timeline that you can work on getting credit. We have advice for people every day. There are some things that may have priority. We can look at your credit, and sometimes things can be real simple, such as, okay, let's slow down on paying this. How about we speed up over here? Do you have a nest egg of money somewhere that we can just dump at the bad credit to kind of make it go away? Whatever the circumstances are, and I share with people, I've never seen two clients that were the exact same. Every client that I have is different. So you've got to have someone who's going to look at your particular situation and make recommendations that are going to help move you forward. I'll talk with clients often, and they'll tell me all about how, well, I was talking to so-and-so, and this is what happened with them. Unless they had a mirror and it were your exact circumstances, that won't work for you. What worked for someone else won't be what can help get you there. So stay encouraged if you're not ready. Keep the energy level where it needs to be. So again, you're intentional with your next steps. If you want home ownership, you can get there, but you've just got to make sure that you're taking the steps, and just simply not giving up. You won't buy one if you give up.
That is true. Thank you so much.
You're
Thank
welcome.
you for asking. So it's interesting, and I'll say two things. I'll put in a couple of plugs. One, I wrote a book, and my book is called Excessive Debt is a Disease. And in that, I help people with the process of getting out of debt, to building their credit score and putting themselves in a position where they're ready to purchase a home.
Mhm.
And then secondly, June, the last Wednesday of June, I'm having a credit expert to come on and talk about the 5 laws of credit and how to move that needle where it benefits you as a potential homeowner.
Mhm. Mhm.
I have another question for you.
Okay.
Sandra Shipman, Willette, is there any benefit to renting with the option to buy? Good question. From YouTube. Okay.
Okay. All right. So there are benefits there. Let's just say, and I think of it in terms of maybe you've been renting a place and you know that this is your dream home. You don't need to go out and look for another one. This is it. And you know you've made that decision. So now it's the bridging of the time with the loan in order to purchase it. And if you find that seller who's willing to allow you to rent for a period of time until you can get ready, well, it certainly is in your best interest and a benefit to you to go ahead and look at that as an option. I've seen people successfully do it. Be very, very careful. There are cautionary tales associated with that process. At one point, you would see lots of rent to own options out there for people. What you found though was there was a lot of scams associated with that process. And what they would do is they would, find that buyer, put very restrictive covenants in the contract wherein you've got mandated timelines that things had to happen, very aggressive, for the most part, pretty clear that you may not be able to make it. And they would take that seed money that you put up. Maybe it was 3 or 4 months rent up front, because they usually will tend to want a lump sum of cash. But if you weren't able to fulfill the contractual obligations there, then they had the option of keeping your money. So make sure that you have legal counsel on exercising that option, so that you're not stuck out there and potentially losing your money. And don't sign up for anything that you can't realistically see yourself getting, making it there. So if you know, or you're pretty sure that $10,000 a month here, and you don't have the ability to make that, don't sign that agreement. Make sure that it's logical, that you've got legal counsel, and it's doable under your circumstances.
It's so interesting. If you look back historically for African Americans, the
Mhm.
pathway for home ownership has been tough.
Yes, it has.
And still, culturally, ethnically, we're still not buying homes on a larger scale. We're still, whereas white Americans, 65% own homes, Hispanic Americans, 25 to 30% own homes, African Americans, 20 to 25% own homes. So this is a way to generationally build. And I remember very clearly during the Great Migration, when my parents came from the South up to the North, that it was challenges to buying homes. And my aunt, my dad's sister, the landowner allowed them to purchase the property, and I guess it wasn't legal. And I have the document that I just received when she passed away, that he wrote a handwritten agreement to allow them to rent to own. So as they were paying down the house,
Mhm.
he wrote an agreement and allowed them, because they worked for him. He
Mhm.
took out small amounts of money each month to pay for the mortgage. And after a number of years, they did own the home. So there is a process. You're right. There are a lot of scammers, because also back in the Caribbean, they would hire you. And just when you were about to pay off the home, they would fire you. And
Exactly.
then you had no option to buying that home. So there's a lot of trickery out there.
Mhm. Mhm.
So
It's gotta
there's,
be.
yeah. And, we have to be careful. And that's why I'm appreciating you, and you're being transparent, and you're being honest, and you're not just throwing us into the process, and we're getting lost amongst the wolves and being devoured in this process.
I agree. I agree. Lots out there, lots of history, lots of background. Lots of trickery. So you just got to
Lots
be
of
careful.
trickery. And, we have such a distrust in so many facets. And being a healthcare professional, I see it in healthcare. Being a financial professional, I see it in finances. So I'm so thankful that I'm enhancing my knowledge so that I can bring it to people and empower them to take that step. And sometimes you got to hold a hand, which is what you're doing. And this is what I love. You got to hold a hand, but in holding that hand, we're moving the needle forward. So we're having more equity and building assets. And I love that.
Certainly.
I have another 2-part question for you in the chat. Leader of the pack, is there a credit score that is acceptable to begin the home buying process? And his second part, I would like to share house buying with my family members who are currently renting. How do I start the conversations? Love that.
That's good. So the absolute minimum credit score that the majority of lenders can assist you with is going to be a 580. And again, credit scores in the mortgage business are different than when you go to the car lot and purchase a car, or you go to the bank and get a personal loan. In mortgage lending, we have what's called a tri-merge credit score. And the report is going to have a credit report from all three of the credit score providers. We're going to have something from TransUnion. We're going to have something from Experian. We're going to have one from Equifax. All three of those credit scores make up a tri-merge credit report. We're going to throw out the highest score. We're going to throw out the lowest score. Whatever that middle number is becomes your qualifying credit score. So as long as your qualifying credit score is 580 or above, you then are eligible to purchase a home. Now, what type of loan are you eligible to get with that? An FHA or VA loan. You can't get a conventional loan with that. You can't get a USDA loan with that. And several other ones that are out there and available. But you can get an FHA loan or a VA loan with a 580 credit score. And I think, what was the other part of the question there?
The other part of the question is, how do you have the conversation with your family about home ownership?
Okay. So here's the thing that I share with people, because I can look back personally on this. When I purchased my first home, my mom had never purchased a home. My sisters had never purchased a home. And I love to say that, being the first to do that, it is so inspirational for the rest of the family, because what they find is it's not rocket science. We could all do it. My husband and I purchased a home. My sister purchased, and her husband purchased a home. My parents purchased a home. So opening up the conversation in a very positive manner and showing, listen, we can do this. We can all do it. You will see people that it takes that one in there to inspire, and maybe, leader of the pack can be that person in their family that can get out there and say, hey, we need to do this. And you can get, again, with a good qualified loan officer to look at everyone, see who's eligible and ready to go, let them go ahead and get started. And, maybe they can get together and help the one that's, not quite ready at the moment, so that they can all benefit from the home ownership, but just in a very positive and encouraging manner, and explain to them that it's never too late to do it. If we start now, we'll finish quickly. Let's just get on with it, though.
So our time is winding down. I have one more question in the audience before we wrap this up, okay?
Okay.
And this is from Geneva Robinson. When the market goes down and the interest rates drop, is that a good time to refinance?
Absolutely. One cautionary tale with that, though, is you want to make sure you get to the point where there's enough spread in the current interest rate you have on your mortgage and what that new interest rate is going to be to make it beneficial to you. As soon as you start to see the market move, the first thing that you'll get are the lenders reaching out and everybody's ready to refinance you. You want to take time and make sure that that's floated down enough that you're going to benefit, and that it's not going to turn around and drop right behind you after you've refinanced and you're feeling encouraged or feeling like you've got to do it again because you didn't wait enough time in order to get the maximum benefit of that refinance. You don't want to over refinance. There are fees associated with doing that also. And you don't want people on the other side to be the one that benefit the most from your efforts. So just make sure that you've watched it. There's enough spread in the rate you currently have with where you're going, but it is absolutely a benefit to refinance when that happens. It may also give you a time to get an opportunity to get rid of that pesky PMI insurance that we discussed earlier.
Trina, give me 1 second. Let me introduce my next guest before we sign off together, okay?
Okay.
So it's always important to be in a position where we're empowering each other through home ownership, through insurance purchasing, through taxes. And then I have one of the baddest men in the United States. This is my personal financial advisor. His name is Mr. Antoine Harris. He is the owner and operator of Platinum Bridge Wealth Management. Check out his website. This brother is all that. He was, in 2023, he was one of the top 50th financial advisors in the country. I've known him for more than 10 years. I love him. He's been on my show in the past. This brother's knowledgeable. You want to be here because he's going to show you how to grow your wealth. It's important that we have these tools in our toolbox when we're ready to need them, when we're ready to utilize them. So check it out on Wednesday, May 29th, Mr. Antoine Harris. He will have get your wealth to go in a position where you can grow. So let me get back to Miss Trina and say to Trina before we sign off, Trina, are there some takeaways that you want to leave with everyone?
I like to think of the do's and don'ts of lending. Those are big. First thing being, if you know you're getting into the lending process where you're ready to purchase your first home, it's not an ideal time to go and open new credit accounts. Let's try and not change jobs during the loan process. Don't co-sign for others. That's a bad time. Let's not make any late payments. And for goodness sakes, don't lie on your loan application. If we start out and we find that things aren't in line according to what you said, then we've got to drop back and figure out how to fix that. Rebuild that trust. Do continue to save money. I've not met one client who saved too much money. They'll ask me often, how much do I need? I'll give them a figure. I said, but you need as much as you can save. So let's get on with saving. Keep credit card balances low. Be mindful of credit inquiries. That's not the time to shop your credit around with everything. Go to the car dealership and do too much. Just be mindful of it. Watch that closely. Stay within your budget on purchasing a home. If you know your maximum mortgage payment that you can comfortably pay is $2,000 a month, you may not want to be paying $2,500 a month if you know that's going to create a deficit in the cash flow in your home. Okay. Ask questions about anything during the process that you don't understand. We don't expect you to walk in knowing everything. So we want to make sure we can advise you as best we can. And we're the professionals here to answer any questions you may have.
Wow, Trina, the hour is gone. And I can't thank you enough. I know we have people streaming live from YouTube, streaming live from our website. There are people live here with us on StreamYard. This is phenomenal. You are the resource that our community needs, and I greatly appreciate you. But I want to say thank you for being here. Thank you for trusting the process, and thank you for being in a position where our audience can come to you and get the questions that they need answered so that they can go on the pathway to home ownership.
Excellent. Thank you. You're welcome. Glad to be here.
Thank you. Have a good night.
Thanks. You too.
Another good episode, guys. I will see you guys back here with Antoine Harris, May 29th at 7:30. Check him out. Let's become multimillionaires together. We can do this one step at a time, $1 at a time. Home ownership, investments, compound interest. You will hear it all. An hour will not be enough, but I'll get as much in as I can. I love you. See you next time.
It's the queen from Queens with the money when it matters for you and I. the queen